Mehta is with us. Dipan, apologies, we are coming to you late. But I mean, if you've been listening in, we had the PNGRB member and a bit of breaking news happening here. What did you make of the entire saga?
I heard how to Harsh, and I think he's put it in a very succinct manner what the challenges are that these companies are facing. But the key question that I want to ask is the growth, because end of the day, we are seeing electrification taking place on the transportation sector, and that's going to impact long-term volumes of these natural gas distribution companies and LPG companies per se. And transportation was a big factor driving growth in the few years. I think 2, 3 years ago, it was a big driving factor. But now it's clear that electrification of the power sector, especially like buses and other public transportation, is also shifting towards electrification, the Uber Olas as well. So that's going to impact the volumes. And as Harsh said, that if they're going to behave like a utility, then we're not interested in them because we want growth, and growth no longer seems as easy for these companies. And of course, this development certainly is quite negative from a longer term perspective, because that tends to impact the sentiment in the stock, and it'll have a adverse effect on the price to earnings multiple as well.
Let's speak about EV and growth out here as well. Then Dipan, one of the stocks that did extremely well over the last two trading sessions, and at a time when the broader markets are bleeding, is Tata Chemicals, up 11% yesterday, another 8% in the previous trading session, making the gains for this week almost 21%. While the thesis here is that maybe, there could be some sort of chemicals that they would make that would go into making the batteries of EVs, etc. The other thing that people are talking about is the potential value unlocking through the shares that they have of Tata Sons. Your thoughts on this entire space, Tata Chemicals? What should one do, especially after a 21% up move? And usually the stock moves, in one way in a cyclical manner.
With that said, I think it moves in a cyclical manner because it is a cyclical stock. And while they're making efforts to get out of the cyclicality or profitability by getting into chemicals which have long-term potential in the EV space per se, but still it's a small business, and a lot of hurdles are there, need to clear the technological aspects, and it'll be a while before those products become mainstream. But in the meantime, I think there's a lot of earnings volatility because of global subsidies which they have, and then soda ash prices also keep on fluctuating depending upon glass demand. So when you look at the entire picture and the valuation at which Tata Chemicals is trading at, and the recent numbers which have come through, which have not been impressive, I would put Tata Chemicals on hold, at least not look at any fresh investments. And no doubt, I think unlocking of value through sale of Tata Sons, that could be a trigger for the company. But underlying fundamentals and the valuations are pretty much stable, and the risk return profile doesn't really benefit you making a fresh purchase of Tata Chemicals.
Dipan, stay with us. We have a bunch of other questions which we want to put to you. But we'll do that in just a bit from now. So for now, we'll take a break. Mitesh and Dipan is still with us. Dipan, thank you so much for waiting by. I just want to start by talking about a few other names, right, where there has been some selling pressure. So these NBFCs. So there was, of course, JM Financial, IIFL, etc., which continue to sell off. I'm not sure if you own any of these, have owned or looked at these businesses closely. Manappuram sold off sharply. I'm assuming there the issue is the Asirvad IPO, right? I mean, what will happen to that one? That was down sharply because Muthoot, the other one was actually higher, 2.5, 3. So this was a company-specific issue. AB Capital sold off. L&T Finance was down sharply. Your sense on this space?
Yeah, Prashant, I think that Street is fearing more such regulatory action coming through. And while the long-term fundamentals of these companies do not get affected because of these, kind of compliance issues, because these are great managements and they eventually will fix it. But there could be a subdued impact on the near-term performance of these companies, and such regulatory action can be expected in other NBFCs as well. So that's taking the sentiment down for the NBFC space per se. And I think it's a step in the right direction, and it's very healthy from the long-term prospects of these companies, because competitive intensity and the absolute target-based growth does tend to result in not so conservative lending. And if that were to continue, then certainly at some point of time you could have a bit of a credit crisis. And RBI, in its wisdom, I think, is taking the right steps to ensure that we don't have a repeat of that 2018 ILFS type of a scenario, where NBFCs were completely pummeled because of various reasons. So from that point of view, I think there is short-term pain, but eventually in the longer term, it will improve the internal systems of these NBFCs and will enable them to grow in a more sustainable and a stable and a safe manner, which is very important from a minority shareholder's point of view.
No, I completely agree. Dipan, the other space, actually, there are two areas. One is life insurance companies, right? Yesterday we saw, because I mean, that story that we did was pretty significant that the IRDA, the regulator, is looking at rolling back on some of these surrender value proposals. So it's going to be good for, actually significant for many names there. Stocks did react that day, but then of course the market went into a bit of a spin. But yesterday we saw signs of life. So anything you like in that space. And second is hospitals. Max Health, after many days of being lower, was up about 4% yesterday. So some interest there. Just your thoughts.
See, I think we are positive on healthcare because these are sustainable long-term growth stories, and expenditure on healthcare will continue to grow for several years as the entire population is certainly aging and there's more awareness and availability. But if there's government interference in pricing, then that certainly is a bit of a negative. So I think these stocks are in a flux, and I wouldn't want to buy them unless there's clarity, although I want to sell them as well because near-term growth will be pretty strong. Insurance companies per se, I think, are great long-term businesses, but they are quite expensive at this point of time. But I do like, with usual disclosure that we and our clients are invested, do like LIC, where there is definitely a case for re-rating of the valuation multiples. And somehow I think the company's got its mojo back when it comes to generating the premium income, and they're focusing more and more on the profitability non-par segment, which they have said so for the past 2-3 years, and we are seeing some results over there. Gradually, it's becoming a higher and higher part of their revenue and the entire pool. So from that point of view, and valuation comfort, and the fact that there is so much of interest in PSUs, I think that LIC certainly, in our opinion, one of the better picks in the insurance sector. Having said that, it's a company in which we and our clients are invested in.
All right, Dipan, thank you so much for joining in on a whole host of fundamental stock ideas and analysis with us this morning. We'll let you go on that note, and also let